Well, the Thornburg Investment Income Builder Fund has been a steady performer for the past 5 years.
It ranks in the top 2 percentile among its peers and has outperformed the broader market as well. Brian McMahon is CEO and Chief Investment Officer of Thornburg Investment Management. It has $63 billion under management. He's been managing the fund since its inception in December of 2002, and he's here with us on set here today, even though you are based in
Santa Fe, New Mexico.
That's what I thought. I knew it was in the Southwest somewhere. So thanks a lot for coming in. It's nice to see you in person. So talk to us about this, the Income Builder Fund specifically, and kind of the strategy behind it, how you pick the stocks to go in.
Sure. We have two goals. The first is to have an interesting income stream today, interesting dividends today. And next, we want to have a growing dividend stream over time. And we've been able to do that. It's challenging in today's environment, but we've been able to do that.
So how do you, we've been talking a lot about dividends recently. A lot of companies have a lot of cash in this environment, and they're cautious about exactly how they're going to deploy it. How do you choose the companies that are going to use the cash for dividends, for example, rather than buying back stock or making acquisitions in this environment?
Yeah, we look for two things, Julie. We look for ability to pay a good dividend. That means you have a good business and it generates cash. And the second thing is willingness to pay. And you see that decision is made in the boardroom. It tends not to be inconsistent. So companies that pay good dividends over time tend to have stable programs and vice versa. What we'd like to see is more of the companies that have the cash share the cash with shareholders.
How do you convince them to do that?
It's not easy. It's a decision that's made in the boardroom. And as Julie said, it's a conservative time. Boards are interested in hoarding cash, particularly boards of financial companies.
And they're hoarding it for?
Just in case. Just in case.
Absolutely. In this macro environment, absolutely. When you are looking for the income streams that you say are going to grow over time, what are your metrics? What specifically are you looking for?
Well, again, hopefully a business that'll grow, but I could give you a few examples.
Absolutely.
A company like Intel that didn't pay a dividend until the last decade, well, they've grown their dividend by 20% annual rate the last 5 years, and today have an interesting yield, 4 or 5%, depending on what day you buy it.
Very good.
Let's also talk about some of the other stocks that you're looking at, because you look outside the U.S. as well.
Yes.
We should mention telecom stocks tend to be high dividend payers, both here and abroad. Telefonica is one of the companies you're looking at. This is, of course, a Spanish company. And I'm curious, Spain has gotten a bad rap recently, I think we can say.
Yeah.
The company, more than a third of its business still is in Spain, even though it's definitely been branching out in other areas. Is that a source of concern for you?
It's not such a source of concern because Telefonica has 280 million customers globally. It's the 5th biggest telecom in the world. You're right that they have problems in Spain because the economy has been slow, but they're very dominant there. It's not going backwards for them. And most importantly, after they just bought fixed line business in Brazil, there'll be about 70% of their business outside of Spain by next year.
Brian, you also like Total. It explores for producers, refines, transports, and markets oil and natural gas.
That's right. We do like Total. The energy producers, the hydrocarbon producers, have 5 to 7% yields if you look in Europe particularly, where people are kind of stock averse at the moment. Total is about 6 in the middle. They produce about 2 million barrels of oil equivalent per day. So they're a major producer. The dividend is about $2.28 this year, and we think they can grow it to $2.30 or $2.35 next year.
At the same time, Total, any company that has refining business, it's been squeezed a little bit, hasn't it? How big of Total's business is that?
It's a small percentage in terms of income this year. It's a very small, less than 10%. Refining is volatile. It's not good for anybody at this time, but that's all in the price at the moment.
All right, and Brian, can we quickly, in about 20 seconds, Fifth Third Bank?
Well, we're talking about the preferred here, which is kind of an interesting way.
Very much so, yeah.
Yes. Fifth Third Bank preferred pays an 8.5% dividend on the par value. It sells at a price of about $130. The stock's about $12. The conversion price is about $11.60. So it's in the money. So we get a 6.3% yield, and we have a full play on the stock. And that's hard to find in the United States.
Very much so.
All right, Brian McMahon of Thornburg, thank you so much for coming in.
Nice
to
see you.
Appreciate it.